Geopolitical tensions are boiling. Oil is surging, just like we called a few days ago. Gold is also breaking out too. Here's the thing, panic isn't a strategy. In this video, I'll show you how to stay positioned, stay paid, and stay sane while the market loses its mind. What's going on here in the geopolitics? Iran breaches the nuclear limits. The International Atomic Energy Agency reporting that Iran is violating the nuclear regulations, and the talks are breaking down. The U.S. evacuates now its non-essential staff in all embassies in the area that Iran can strike. And now Israel is considering unilateral actions against that. We could see a full escalation going. At least it's moving that way. Now let's talk about it on the charts. So here, when we look at crude oil, we were talking about this basing formation and the flagging formation, technically saying all it needed was a catalyst to get some sort of a short squeeze underway, and we got it. So should you buy now? Well, really at this stage, we have a diminished asymmetry. Now, of course, things could continue to escalate, and we could have something in the mid-70s very easily. But at the same time, we're approaching a key technical resistance level where we've already got close to a $9 surge higher in just a week or two. And so now that we're up here, you want to make sure you're careful about how you take on brand new positioning. One of my favorite ways to do it right now is opening bull call spreads, because you can still achieve a nice asymmetry by opening it up through an option strategy as opposed to trying to trailer a stop loss behind this oil market. Now, do I think that there's going to be a reversal in this? No, not necessarily. That we could have a pullback maybe to $65, another $2 pullback. But so long as these geopolitical tensions are there, the idea that we're going back to $60 is now a thing of last month. So at this stage, dips like that are probably going to be buying opportunities around 65 bucks. Then we could be looking for another $5 to $10 surge up towards that $70 to $75 level, which would be a very logical place to start trimming or locking in the profits made on oil. But let's talk about gold here, because gold's up $60. Now, there are other precious metals markets have been ripping. We've been talking about platinum, we've been talking about silver, we've been talking about all of these other precious metals, even palladium, that have been all working really well. Now, gold has been in a consolidation for over a week, but here is the breakout candle. Now, we got, I'm going to just draw a trend line along all these highs after a little consolidation that held above fib zones, above its moving averages. Very typical little retracement. Gold is attempting to break out, and if it goes, the measured targets are there toward 36 to 3,700. Now, this is exactly the type of a trade that actually can just be at the beginning stages, the way it was with crude oil just a week ago. So watch gold whether or not this is the big breakout.